What is up? It is Big Char Trades back with another video, and in this video I'm going to show you exactly what higher time frame PD array and lower time frame change in stated delivery actually means. So there's a lot of confusion among this topic. You hear a lot of people saying higher time frame PD array plus lower time frame change in stated delivery. Okay, you've probably also heard me talk about a multi-time frame entry model, which is exactly this. Okay, so there are a couple elements that are important to have an understanding of when I mention this. Also, guys, I have a full video on SMT. You can go find it on my YouTube channel. SMT is also very important in my entry model. It's a very important confluence, but in this video, I'm making it specifically about higher time frame PD array and lower time frame change in stated delivery. There are a few things that you have to be conscious of when you are trading this sort of multi-time frame model. The first thing is you have to understand what a PD array is. Okay, so what is a PD array? Okay, second thing is you have to understand how is change in stated delivery confirmed, right? Third thing you have to understand is time frame alignment. Okay, these are not, I didn't put these in order. All of them are very important. So I'm just going to break each one down, and then I'm going to show you what higher time frame PD array and lower time frame change in stated delivery actually means. Okay, so first of all, what is a PD array? Okay, it's pretty easy. Okay, PD array, fair value gaps, right? Fair value gap, order block, breaker block. Okay, these are the three types of PD arrays. Okay, and let me just specify even further here. HTF, higher time frame, LTF equals lower time frame. Okay, so when I say higher time frame, PD array, lower time frame change in stated delivery, this is how you understand. Okay, so yeah, what is a PD array? Fair value gap, order block, breaker block. Okay, how is a change in stated delivery confirmed? Okay, so for a bullish change in stated delivery, okay, we are waiting for, or should I say, confirmed when we have a candle closure above the series of down close candles that swept lows. Okay, and a bearish change in state is confirmed when we have a candle closure below the series of up close candles that swept highs. Okay, and then time frame alignment. Let me make this a little bit easier for you guys to see and read. Okay, time frame alignment. Right, there are a couple things when it comes to time frame alignment. Right, we have to understand the time frames that are actually being aligned. So here are all of our higher time frames. Okay, you might want to screenshot this. If you're watching this, you might want to screenshot this. Okay, so these are the important ones. Okay, daily PD array. Okay, obviously higher time frame, hourly change in stated delivery. Okay, 4-hour PD array, 15-minute change in stated delivery. Okay, 1-hour PD array, 5-minute change in stated delivery, and then 15-minute PD array, 1-minute change in stated delivery. Okay, these are the time frame alignments that you have to be conscious of when you're trading, right? If you ever see a PD array on the 4-hour, you know that you're looking for a change in stated delivery on the 15-minute. If you see a PD array on the 15-minute, you're always looking for a change in stated delivery on the 1-minute. If you see a PD array on the 4-hour, you're looking for 15-minute. If you see a PD array on the 1-hour, you're looking for 5-minute. Okay. Now, I want to show you a few examples so you truly understand what higher time frame PD array and lower time frame change in stated delivery is. This is my entry model. This is classified as a reversal model. So what do I mean? This is not a continuation model. This is a model that I use to catch reversals, which is why I trade the 950 macro. I can get into that in another video, but the 950 macro is typically when manipulation ends, right? So manipulation usually begins, called the Judas swing, at 9:30. It usually ends around 9:45, 9:50. So by trading the 9:50 macro, I am trading a reversal out of that manipulation. If you watched my previous video, my trade exactly exemplifies what I'm talking about. Okay, it was a trade out of that manipulation. So let me come in here, the replay feature, and I want to show you what I mean by higher time frame PDA, lower time frame change in state of delivery, right? Just write it out again. Okay, you've probably seen this all over my Twitter, all over everything. So, okay, this is what this means. We are currently on the 4-hour time frame. Remember time frame alignment. What is aligned with the 4-hour? What is aligned with? Okay, so what's aligned with the 4 hours of 15 minute? Okay, what do we see right here? This PDA right here. What is this called? Okay, this is called a fair value gap. So this is a 4-hour fair value gap. Okay. Okay, this is a 4-hour fair value gap. So with my time frame alignment in mind, keep it in mind, what is aligned with the 4-hour? What time frame do I have to drop to and wait for a change in state of delivery out of this PDA? I have to drop to a 15-minute time frame, right? Because the 4-hour, remember, 4-hour PDA is aligned with the 15-minute change in state of delivery, right? The 4-hour is the higher time frame, 15-minute is the lower time frame, right? So, okay. Obviously, guys, I just want to clarify this again. SMT is a really important confluence in my entry model, but this video is not about SMT, so I'm not going to be looking for SMT in the setup, although I'm sure it's there. I have a whole other video explaining SMT. I think it's called SMT Explained or SMT Divergence Explained. You can go watch it. I'll also link it right here, so you can just click on it if you want to watch it. But I'm just covering higher time frame PDA, lower time frame change in state of delivery here. So, okay. Price trades into this 4-hour fair value gap, right? This is our higher time frame PDA. So I drop to the 15-minute time frame, and I'm waiting for a change in state of delivery. Okay, do you remember what a change in state of delivery is? Okay, price just traded into this 4-hour gap. So what did price just sweep? Price just swept sell side liquidity. Okay, and if price sweeps sell side liquidity, and we're looking for a bullish trade out of this fair value gap, right? We're looking for a move to the upside. Okay, we're looking for this. We're looking for this. Okay, if we're looking for that, we're looking for a candle closure above the series of down close candles that swept these lows. Do you get what I'm saying? Do you get what I'm saying here? So we are looking for a candle closure above this series of down close candles. Why? Because we swept lows and we're looking for a bullish change in state of delivery out of this 4-hour fair value gap, right? Because 4-hour is aligned with the 15-minute. So what did I just say? I said that a 15-minute change in state of delivery is valid out of a 4-hour PDA. What PDA are we looking at right now? We're looking at a 4-hour fair value gap, meaning that we're looking for a 15-minute change in state of delivery out of that 4-hour gap, right? So we're looking for a closure above this level. So let's see what price does. Okay, price consolidates. Okay, not much movement. We're still in this gap. This is probably overnight. Yeah, this was overnight. So, still applies though. Don't worry. This is still the series of down close candles that swept sell side. Okay, so we're still looking for a candle closure above this range. So, zoom out a little bit. Let's see what happens. Okay, consolidation. This is overnight. Okay, boom, right there. Right, this candle right here. Let me highlight it so you understand. This candle right here is the candle that changed the state of delivery. Why? Because again, remember, for a bullish change in state of delivery to be valid, we want a candle closure above the series of down close candles that swept lows. This is the series of down close candles that swept lows, and this candle just closed above it. So that is the candle that changed the state of delivery. So obviously this isn't my macro. This is 4:45 in the morning right now. Okay, this isn't my macro, but technically, obviously this would be a trade that you never take because it's 4:45 a.m. But technically, if I were to long right here, I'm on the replay feature. Let me long right here with 1,000 minis. Okay, let's see what happens. All right, what do we target? Obviously, this is on a higher time frame, but I'm just going to target this high right here. It's buy side liquidity level. Right? Boom. We just made 2 mil, 3 mil. Easy money. Right? But you see how this setup is valid. You see how this setup makes sense. Okay? It makes sense, and I bet this was a 2R trade. I bet it just was. Let's see. Where did we enter? We entered on this candle right here. Stop would go at these lows. Take profit would be at this high. Yeah, just 2.7R trade. Right? So this is what lower time frame, or this is what higher time frame PDA, lower time frame change in state of delivery actually means. So let me just recap here. I'm going to write something out so you can take this, you can screenshot it, you can do whatever you want with it. Let me write this out for you. Hold up. Okay, so just to recap, I have it all written out for you, right? What does higher time frame PDA and lower time frame change in state of delivery actually mean? Okay, so the first thing is price trades into a higher time frame PDA. After aligning your time frames, you wait for a candle closure confirming lower time frame change in state of delivery. Okay, that's what that means. So basically, I have the time frame alignment here for you: daily PDA, hourly change in state, 4-hour PDA, 15-minute change in state, 1-hour PDA, 5-minute change in state, and 15-minute PDA, 1 minute change in state. And then here is how you can actually have your change in state of delivery validated. This is the confirmation, right? Bullish change in state of delivery is a candle closure above the series of down close candles that swept lows, and bearish change in state of delivery is a candle closure below the series of up close candles that swept highs. You can go ahead and screenshot this for your own safekeeping, but this is essentially what higher time frame PDA into lower time frame change in state of delivery actually means. If you're new to my channel, you can go ahead and subscribe. If you're watching this on Twitter, you can go ahead and follow me. I plan on posting a lot more videos like this. But yeah, hopefully this video helped, and now you have an understanding of higher time frame PDA, lower time frame change in state of delivery. I have another video explaining my entire entry model. I have another video explaining SMT. I have a video explaining daily buys. I have hundreds, or not hundreds, I have 8 videos on my channel that you can go ahead and check out, right? At Big Chart Trades on absolutely every single platform. Go ahead and comment and like if you enjoyed, and peace out.